You are listening to chartingwealth.com for Thursday, the 25th of February, 2016. What do we have going on? Well, we always start with IYY, which is an exchange-traded fund that tracks the entire market. It's a total market index, and it has 4 up candles, green open boxes starting around the 16th of February, going up since then through the 24th. We've got a nice, good, strong trend line that the market continues to move up on, and we have confirmed up moves on the big chart. Now, what do we have going on the small chart? Well, we always look at the big 2-day chart and then the smaller, quarter smaller, half-day chart. Actually 4 times smaller. It's quarter the size of the 2-day, the half-day or 4-hour chart. We have seen the market move down, actually moved down a lot in the morning, recovered a little bit in the afternoon. Currently, the derivative oscillator has rolled over into the negative, and the MACD on the 4-hour chart, the moving average convergence divergence indicator, which is the big one we use, tried to do it, but it didn't quite happen. In fact, the market is riding right along the 2-day trend line and did not cross over going down. So we don't have a confirmed down move. Still in confirmed up moves on the big chart and the small chart. The market technically was up for the day, 0.54% in the total market. Now, let's go from there. We're going to go back to our 2-day chart, and we're going to take a look at SPY. What is that? Well, that's the Standard & Poor's 500, another index. This tracks all the big stocks in the S&P 500, a lot of the volume in the market. We see 3 up candles in a red open box over the course of the last 2 days, ending on the 24th. What do we have happening in the SPY? Well, it was up 0.46% for the day. Market is right there at the 2-day trend line. If we drop back and take a look at the 4-hour half-day chart, we can see that it also did not quite cross over on the 4-hour chart with the MACD. Didn't cross the signal line. Derivative oscillator did move over. Market is hovering right there on the 2-day trend line. So again, still in confirmed up moves on the short chart and the long chart. The market is long. Now we're going to go back to our 2-day chart, and then we're going to look at the Qs. What is the Qs? That's the NASDAQ 100. Looks sort of similar to the S&P 500 in that over the last 2 days on the 2-day chart, we have a red open box. Again, not strong down moves. The market itself was up 0.95% for the day, although we're looking at a 2-day chart here. We can delve into that a little more looking intraday by going to our 4-hour chart. What do we see? Well, we see that again, the market moved back up over the course of the afternoon. Derivative oscillator rotated over actually in the morning on the NASDAQ 100. A lot of down movement in the morning, bit of a recovery in the afternoon. Again, the market was up almost 1%, didn't cross over going down. So all 3 of our indexes confirmed up moves on the big chart and the small chart. What were we waiting for? We were hoping to have a complete rollback so that we had a crossover on the MACD crossing through the 4-hour MACD so that we would then hopefully see a move back up after the market backed up and we would find an entry point. That has not happened yet. We will continue to watch for that. If you'd like to know more about how to read a stock chart, that is real easy. All you got to do is go to chartingwealth.com, sign up for our daily market review, which will also include once a week our weekly review and forecast, and you will get for free by doing that a link to our How to Read a Stock Chart video. Give you a lot of great information on how to read stock charts, what we talk about all the time here, because a stock chart is your map to where the stock is coming from, or the index, or the commodity, and where it is going. The better you learn to read those charts, along with all the other financial information. I have people all the time say, well, isn't it important to know what the company's investing in, be able to read their financials and this and that and the other? Of course, all that can be very important. But what's really important too is to be able, because you can go buy a nice car. You can have a great car, but if the reason for having a car is to take you from one place to the other and you don't know the map on how to get there, you're just going to drive that car around in circles or make very wrong moves with it, or maybe drive it off the road and destroy it. The analogy we're giving there is, sure, it's nice to buy good companies, but you want to buy them at the right times. You don't want to buy when the stock's going down because maybe the whole market's going down. You don't want to buy when it's topped out. You don't want to sell when it's bottomed out, okay? I mean, you want to make sure that you do things at the right time. You want to sell at the high point. You want to buy at the low point. That's what the ability to read a stock chart gives you and why it's so important, why you should study it, in addition to everything else. Now, lastly, we're going to range back out to our 2-day chart and we're going to talk about gold. Gold was up 0.33% for the day. We had drawn a 2-day trend line that had been broken about 4 days ago as the market slid sideways, still not recovered anywhere near it was on its high on the 12th of February. The market has been slipping sideways for a while as far as the 2-day chart goes, still in a confirmed up move on the 2-day chart, even though the derivative oscillator has been losing some of its energy. If we take a quick look at the intraday chart, the 4-hour chart, what do we see? Well, we see what we saw happen back in December when the 4-hour chart stopped working for us, because we were using that as a trading chart, if you will recall, many months prior. It worked wonderfully well until the market started sliding sideways in gold, as it has been doing since sometime around about the 11th of February. The market has been sliding sideways, even though it crossed over going down around the 16th. What's it really done? It's really just sort of slid sideways. It is attempting to recover, still in a confirmed down move. Remember, the MACD, the moving average convergence divergence indicator, is a great indicator in a market that is moving, a market that is going up or going down. But when it starts sliding sideways, the MACD loses a lot of its ability to be really good for us. So we're now having to basically go back to the way that we typically trade any commodity, any stock, any index, and that is using the 4-hour chart as sort of our trigger chart, along with our main trend showed to us by the 2-day chart. So a little disappointed in our 4-hour chart on gold. What is it actually saying? Well, it is still in a confirmed down move. We are waiting for it to cross over going up to parallel the up move that gold is currently still in on the big chart. Once that happens, that would be your trigger point. You don't have a trigger point yet to look at getting into gold long or gold going up. And again, just another quick little lesson. Whenever anybody says I'm long in something, it means I'm expecting it to go up. Whenever anybody says I'm short in it, they're expecting it to go down. The nice thing about gold, the nice thing about the total market, about the S&P 500 and the Qs, for instance, the Qs, QID is an inverse fund that tracks the NASDAQ 100 in the inverse. So when the market is going down, QID is actually going up. That is a neat offer for anybody out there who gets really good at following, say, an index like the Qs. If you can read the Qs like the back of your hand and you get really good at being able to follow it, why in the world, when the Qs is going down, would you not buy QID that is going up at the time that the Qs is going down? Because that's just smart. And I'm actually plugging that in for those that are watching on video. It runs in the opposite direction. When the market's going down, QID is going up. That's what's so beautiful about being able to read a chart. You can easily make money when the market is going up or down in these indexes. Now again, we never give advice about buying real things. We make sure everyone understands we're an education company. We're not a stock calling service. We are not paid to do that. We do not do it. We offer everything we talk about education only. We encourage you to go to any of the online brokerage houses, set yourself up a virtual account, and start practicing the things that we talk about every day. Get really good at it, and when you do, you can make your own decisions. Thank you so much for joining us. We appreciate you being with us every day at chartingwealth.com. It's worth 10 minutes or so of your time every single day if you want to learn how this works and get good at it. It will pay dividends for life. Thank you so much for being with us from chartingwealth.com.